All right, so Newmont Corporation,
Yeah.
they're one of the biggest players in the gold mining industry,
Right?
and they are shaking things up.
Big time.
And today we are going on a deep dive to try to figure out what exactly is going on here.
Sounds good.
So we have this press release
Sure.
about them selling off their Cripple Creek and Victor operation.
Right.
That's CC&V
Yes.
for, those of you who
Gonna know.
in the know.
Mm-hmm.
Now, this is just one part of a massive divestment plan.
Yes. Right.
They're aiming to generate almost $4 billion by selling off a bunch of their assets.
It's wild.
$4 billion.
Yeah.
That's a serious chunk of change.
Yeah.
Now, the press release says they're selling CC&V to
Okay.
SSR Mining for up to $275 million in cash.
Okay.
What's the deal with that up to?
Well, it all comes down to something called contingent payments.
Okay.
Basically, extra cash that's only paid out if certain conditions are met.
Interesting. So there's a chance they won't get the full $275 million.
Yeah.
What kind of conditions are we talking about here?
So in this case, some of the payment hinges on Newmont getting regulatory approvals
Okay.
for things like Amendment 14 on the Carlton Tunnel.
Huh.
You see, operating a mine isn't as simple as just digging a hole.
Right.
There are all sorts of environmental and operational regulations that they need to comply with.
Got it.
Yeah.
So these contingent payments are a way to share the risk
Exactly.
between the buyer and the seller.
Mm-hmm.
Okay.
And this CC&V sale is just one small piece of a much larger puzzle.
Right.
Newmont is in the middle of a massive divestment program.
Whoa.
Yeah.
So it's not just as, spring cleaning.
No.
They're practically overhauling their entire portfolio.
It's a big move.
Why would a company at the top of their game
Yeah.
decide to sell off so much?
Well, think of it like this.
Okay.
Newmont is focusing on what they consider their most valuable assets,
Okay.
the so-called Tier 1 gold and copper mines.
Right.
They're streamlining their operations, getting rid of anything that doesn't fit into that top-tier category.
So they're basically doubling down on the best of the best.
You got it.
What exactly makes these Tier 1 assets so special?
Yeah.
Is it just about the size of the mine
Well,
or the amount of gold?
it's more nuanced than that.
Okay.
Tier 1 assets are considered the crown jewels of the mining industry.
Wow.
They're large, long-life mines with low operating costs.
Okay.
And maybe even more importantly,
Yeah.
they have significant untapped potential.
Mm.
A lot of gold or copper still waiting to be extracted.
So they're not just cash cows today.
No.
They're investments for the future.
That's right.
And from the press release, it looks like they're not just keeping their Tier 1 gold mines.
Uh-huh.
They're also holding on to some key copper operations.
Yeah, that's right.
Okay.
Newmont's CEO, Tom Palmer,
Okay.
specifically highlighted their focus on Tier 1 gold and copper assets.
Interesting.
This might seem like a small detail,
Okay.
but it actually hints at some much bigger trends happening in the industry.
All right, I'm all ears.
Yeah.
What's the significance of copper in all of this?
Well, you have to remember that copper is crucial
Yeah.
for things like electrical wiring, plumbing, and increasingly renewable energy technologies.
Right.
As the world shifts towards a greener economy,
Mm-hmm.
the demand for copper is only going to increase.
Got it.
Yeah.
So Newmont is looking ahead
Yeah.
and realizing that copper is going to be a hot commodity.
Exactly.
Right.
By keeping their top-tier copper assets, they're positioning themselves to be major players in this evolving market.
So they're selling off some assets,
Right.
but strategically holding on to others?
Yeah.
It sounds like they're playing a long game here.
Definitely.
But if these other assets aren't Tier 1 in Newmont's eyes,
Yeah.
why would anyone else want to buy them?
That's a great question.
Yeah.
And it speaks to the different priorities that different companies have.
Okay.
What might not be a strategic fit for Newmont
Mm.
could be a perfect opportunity for another company.
So one company's trash is another company's treasure.
You could say that.
Yeah.
And remember, even though Newmont is selling these assets,
Mm-hmm.
they might still benefit from their continued operation.
Okay.
The mining industry is all about relationships and partnerships.
Right.
So Newmont could retain some kind of royalty agreement or collaboration with the new owners?
So it's not necessarily a clean break.
No,
They might still have a finger in the pie, so to speak.
that's right.
Okay.
It's more of a strategic shift in ownership.
Interesting.
Yeah.
We were talking about Tier 1 assets,
Mm-hmm.
and I'm curious, what are some of the factors
Yeah.
that might make these assets particularly valuable in the future,
Okay.
beyond just size and production capacity?
That's where things get really interesting.
Okay.
You have to think about the bigger picture.
All right.
The global trends that are shaping the mining industry.
Yeah.
For example, some of these Tier 1 assets might be located in politically stable regions, which reduces risk
Okay.
and ensures a more reliable supply chain.
So it's not just about what's in the ground.
No.
It's about the geopolitical landscape, too.
Absolutely.
Wow.
And another factor could be the adoption of innovative extraction techniques.
Okay.
Some of these Tier 1 mines might be using cutting-edge technology
Right.
that allows them to extract resources more efficiently and sustainably.
So they're not just digging up gold and copper. They're
Well,
doing it in a way that minimizes environmental impact
you expect.
and maximizes efficiency.
Precisely.
Got it.
And those factors are going to be increasingly important in the future
Yeah.
as the world demands more resources,
Mm-hmm.
but also expects companies to operate responsibly.
This is getting really insightful.
Yeah.
So we've got Newmont streamlining their portfolio,
Yeah.
focusing on these high-value Tier 1 assets that are positioned for future growth,
Mm-hmm.
but they're also not completely abandoning their other operations. They're finding strategic buyers who can take over and continue production.
Right.
That makes sense.
And what's fascinating is that this whole divestment strategy raises some big questions about the future of the mining industry.
Like what?
Well, if a company like Newmont, a leader in the field, is choosing to focus on a select group of assets,
Yeah.
what does that tell us about the overall direction of the gold and copper markets?
That's a great question.
What are they preparing for?
All right, listeners, are you taking notes?
Yeah.
Because this is where we start connecting the dots.
It's getting good.
We've got this press release about a mine sale,
Right.
but it's actually a window into much larger trends shaping the global mining industry.
Exactly.
Wow.
Yeah. It's like they're reading the tea leaves
Yeah.
and betting on a future where certain resources like copper are going to be in even higher demand.
So how does a company like Newmont actually make those kinds of predictions? Are they gazing into crystal balls?
Huh?
What are they looking at?
Well, they're certainly not using crystal balls,
Okay.
but they are paying close attention to global trends. Think about the rise of electric vehicles, the push for renewable energy, and the rapid development of technology.
Mm-hmm.
All of these things require massive amounts of copper.
Okay, so the demand for copper is only going to keep increasing.
Yeah.
But what about gold?
Right.
It seems like that's always been a valuable commodity.
Gold will always have a place in the market,
Yeah.
especially as a safe haven asset.
Okay.
When economic times are uncertain, people tend to flock to gold as a store of value.
Right.
But even beyond that traditional role,
Yeah.
gold is used in electronics and a variety of industrial applications.
It's amazing how these metals that we might not think about on a daily basis
Yeah.
are actually the building blocks of so much of our modern world.
Exactly.
Yeah.
And that's why these strategic moves by Newmont are so significant.
Right.
They're not just about maximizing profits today.
Mm-hmm.
They're about positioning themselves for a future
Okay.
where the demand for certain resources could skyrocket.
So they're selling off some assets, but they're also holding on to key gold and copper operations
Mm-hmm.
that they believe will be even more valuable down the line.
Right.
Got it.
And by focusing on those Tier 1 assets,
Yeah.
they're essentially concentrating their resources
Mm-hmm.
on what they see as the most promising and profitable opportunities.
It's almost like they're playing chess,
Yeah.
carefully planning their moves and anticipating their opponent's strategy.
Right.
In this case, their opponent is the global market.
That's a great analogy.
Thanks.
And just like in chess,
Yeah.
you have to think several steps ahead to stay in the game.
Right. But if these other assets they're selling off
Yeah.
aren't considered Tier 1, who's buying them and why?
That's where things get even more interesting.
Okay.
These assets might not be a perfect fit for Newmont's long-term strategy,
Right.
but they can still be incredibly valuable to other companies
Okay.
with different goals and priorities.
It reminds me of that saying,
Yeah,
one person's trash is another person's treasure.
exactly.
Yeah.
For example, a smaller mining company
Okay.
might see the acquisition of CC&V as a huge opportunity to expand their operations.
So what might be a minor piece in Newmont's vast portfolio
Yeah.
could be a game changer for a smaller company.
Right.
Okay.
And it's important to remember that just because Newmont is selling an asset
Mm-hmm.
doesn't mean they're completely cutting ties.
Right.
They often retain some kind of stake in the operation,
Okay.
whether it's through a royalty agreement or some other form of partnership.
So they might not own it outright anymore,
Right.
but they're still invested in its success.
Exactly.
Interesting.
It's about strategic partnerships and maximizing value in a complex and ever-changing market.
So we've talked about Tier 1 assets.
Right.
And I'm wondering, are there specific things
Yeah.
that might make certain gold and copper mines more desirable in the future?
That's a great question.
Yeah.
And it gets to the heart of what Newmont is likely considering.
Okay.
It's not just about size or current production levels.
Right.
It's about a whole host of factors that could impact the long-term value of a mining operation.
So what are some of those factors?
One crucial factor is the political stability of the region where the mine is located.
Okay.
Mines in politically volatile areas carry more risk,
Right.
and that can impact everything from security to the smooth flow of resources.
That makes sense. It's like investing in real estate location is everything.
Exactly.
Yeah.
And another factor that's becoming increasingly important
Okay.
is the environmental impact of the mining operation.
Right.
Mines that utilize innovative technologies and practices to minimize their environmental footprint are going to be more attractive to investors and consumers alike.
So it's not just about digging up resources. It's about doing it in a responsible and sustainable way.
Absolutely.
Got it.
Consumers are becoming more conscious of the environmental and social impact of the products they buy.
Right.
And that includes things made with gold and copper.
So the mining industry is facing increased pressure to be more transparent and sustainable in its practices.
Exactly.
Yeah, okay.
And companies like Newmont are well aware of that.
Yeah.
Their focus on Tier 1 assets suggests they're prioritizing operations that meet these evolving expectations.
So it's about staying ahead of the curve, anticipating not only the demand for resources, but also the demand for responsible sourcing and ethical practices.
Right. It's about creating a win-win scenario.
Yeah.
Meeting the world's need for resources while also minimizing the environmental and social costs.
This is all incredibly insightful.
Yeah.
We're really starting to see how Newmont's divestment strategy is connected to these larger trends shaping the mining industry.
And it's not just about Newmont.
Right.
Other major players in the industry are making similar moves, shifting their focus and prioritizing certain types of assets.
So it's a sign of the times,
Yeah.
a reflection of the evolving demands of the global market,
Right.
and the growing importance of sustainable practices. Exactly. It's a fascinating time to be watching this industry.
Well, we've covered a lot of ground here.
Yeah.
We've talked about Newmont's divestment strategy, their focus on Tier 1 assets, the rising demand for copper, and the growing importance of responsible mining practices.
And we've started to connect the dots,
Yeah.
exploring how these seemingly isolated decisions by one company
Right.
are actually part of a much bigger picture.
But I think there's still one big question we need to address.
Okay.
What does all of this mean for the average person?
Right.
How might these shifts in the mining industry impact our daily lives?
That's the million-dollar question, isn't it?
Yeah.
It's easy to get lost in the details of press releases and financial strategies.
Yeah.
But the real impact is felt in the tangible ways these decisions shape our world.
So let's bring it back down to earth.
Okay.
What are some of the potential ripple effects of this divestment strategy on the global economy and the lives of everyday people? Well, one potential outcome is that the increased focus on certain resources like copper could lead to price fluctuations.
So if the demand for copper keeps rising and the supply doesn't keep pace, we could see prices go up.
Exactly.
Yeah.
And that could have a ripple effect on everything from the cost of electronics to the price of new homes.
So what we're seeing in the mining industry could actually impact our wallets.
It certainly could.
Wow.
And not just in terms of price increases.
Right.
These shifts could also impact job markets and even the pace of technological innovation.
This is where it gets really interesting. So we've got these big companies making strategic moves, but the impact could trickle down to Main Street. Okay, walk me through this. How could something like Newmont shifting its focus impact jobs, for example?
Well, think about it. If the demand of copper explodes,
Right.
companies that are well positioned to supply that copper are likely to expand their operations. That could mean more jobs in mining, processing, and transportation.
So it's not just about digging up the copper, it's about the entire ecosystem that supports that industry.
Precisely. And on the flip side, if companies divest from certain assets that could lead to job losses in those specific areas, it's a delicate balance, and the impact can vary depending on the region and the specific resource in question.
And how might these shifts impact technological innovation?
That's where it gets really fascinating. The availability and price of certain resources can actually accelerate or hinder technological progress. For example, if copper becomes scarce and expensive, it could slow down the development of electric vehicles and renewable energy technologies.
That makes sense. Those technologies rely on copper, so if it's harder to come by, it's going to be harder to make those technologies affordable and accessible.
Exactly. And on the other hand, if companies invest heavily in innovation and find more efficient ways to extract and process copper, it could actually drive down the cost of these technologies and make them more widespread.
So the decisions these mining companies are making today could have a ripple effect for years to come.
Absolutely. And it's not just about the price of copper or gold. It's about the choices we make as consumers, the technologies we invest in, and the policies we support.
Okay, so if we're thinking about the future, what are some of the key things we should be watching for? What are the signals that could indicate which way the market is heading?
Well, one thing to keep an eye on is investment patterns. Where are companies putting their money? Are they investing in exploration for new copper deposits? Are they developing new technologies to recycle and reuse existing materials?
So it's not just about extracting more, it's about finding smarter and more sustainable ways to manage the resources we already have.
Exactly. And another thing to watch is government policy. Are governments incentivizing the development of renewable energy technologies? Are they creating policies that support responsible mining practices?
So it's not just about what companies are doing, it's about the broader political and economic landscape.
Right. And ultimately, it's about the choices we make as individuals. Are we supporting companies that are committed to sustainability? Are we making conscious decisions about the products we buy and the resources we consume?
So it's a shared responsibility, governments, companies, and individuals all playing a role in shaping the future.
Exactly. And it's a reminder that these seemingly distant decisions happening in boardrooms and mines can actually have a profound impact on our lives.
Wow, this deep dive has been quite the journey. We started with a press release about a mine sale, and we ended up talking about the future of technology, the global economy, and the role we all play in shaping a more sustainable world.
It's amazing how these threads connect, isn't it?
Yeah.
And it's a testament to the power of curiosity and the importance of looking beyond the surface to understand the complex forces at work.
Well said. So, to our listeners, remember, the world is constantly changing, and it's up to us to stay informed, ask questions, and make conscious choices that align with our values. And who knows, maybe the next time you see a headline about a mining company, you'll see it not just as a business transaction, but as a window into the future. Until next time, keep exploring, keep learning, and keep those questions coming.
See you on our next deep dive.